Hello all, Brian here again from quantlabs.net. Another video I want to show of crypto, how we can use crypto and how it measures against the stock market. So let me just make sure you know about to sign up, opt in to our email list to learn more about these categories, the deep analysis that we can offer now. This will help you get better timing, better analysis of when to invest into, in this case, crypto versus the stock market. So this is a typical chart we can post every day. Um, so right now, this has been seen before last year, 2 years ago. Um, so right now, we have here our standard benchmark of S&P 500, sorry, of the Qs. That's our benchmark. And then here we have our crypto ETFs, which are really the grayscale trusts. So these are sourced out of what's available on Interactive Brokers. So the only one that's been fairly positive over the last while has been Litecoin. So this is just purely Litecoin. So I just want to show you the performance has been pretty good, but very volatile. So you can see here um, that the markets did take a dip. Obviously, crypto was worse off. But when you look at the trending overall of crypto, so that's our strategy in blue and yellow is the benchmark of the Qs. You can see it's outperforming, but this is where it matters right here is when you start to see crypto cross below the benchmark. So that's your indicator to say maybe you should sell and then re-enter once, like here as an example, once it crosses, and then your exit can be here, or obviously when you calculate your peak and you just dump it. There's different ways to go about it, but here when you look at the performance of just purely Litecoin, you can see here Litecoin just eating the lunch of the Qs, right? So that's the stock market, that's crypto, and that's even factoring in the negative or the volatile behavior of Litecoin. So here, even though the Sharpe ratio is only 0.55, it's still pretty good. I will have on my Premier service a best of the best of all these different categories, and it will run using my portfolio optimizer, which will optimize the weightings of the best ETFs to hold or trust in this case. But if you're going to add a Grayscale trust in Litecoin, let's say, and then it will optimize what the weighting should be for forward optimal performance. But that's again based upon uh, past performance of the ETF. So in my mind, I could have gone further back uh, beyond a year. I do find that's a kind of a waste of time because um, does it really matter what happens a year prior to that? Not really, because the markets right now are just so distorted. They're not behaving the way they should. Here, you can see the returns have been pretty good, but these drawdowns of like negative 32% would probably make people say, I don't want to hold it. Their tolerance might be down to negative 15, as in here in September. But on the other hand, you can see it outweighs with the positive performance of 83, 10%, and then it just starts to settle down. But this month so far, it's negative. So obviously that tells you so far for this month, you don't want to hold crypto in your ETF to have negative performance. So that's the whole point of why I segregate out these tear sheets to just show you what's performing, what's not, what's performing for the current month, what you should stay away from. The other thing I need to mention is that if you just want to invest, kind of like buy and hold, long-term holding periods, you will make much more money than trying to actively trade as everything. A lot of it's either in decline or in range bound mode. So you're better off just to kind of take a breather, do your investing into ETFs. Now, in my mind right now, I've said this before when it comes to crypto, you don't want to hold crypto ETFs. The reason for that is that If crypto decides to do a major dump on a Friday night to a Sunday, you won't see that with your ETF that you're holding an equivalent. So let's say you're holding Litecoin and it's performing for the week. Along comes Friday night, Saturday, or Sunday, and then Litecoin takes a major drop. You can't trade out your ETF on during those periods. You have to wait it out until Monday or the next business day to close out those trades, those positions. You may have taken a lot worse hit than you signed up for. So that's the risk of crypto ETFs versus the real deal. So you have to go in with that mindset, because it is a big risk if you go heavy on the crypto. Part of my portfolio optimizer will allocate the weightings based on that, as well. So it's good to know this. And to be truthful, when you look at the Sharpe ratio of, let's say, Litecoin at 0.55, that's not very strong. Okay, you want something over one. Um, I'll take a look at some other ones. They're part of the deal is you want to invest into assets, ETFs that are really uncorrelated to the performance of, let's say, the stock market, uncorrelated to the performance of Bitcoin or what's going on at the macro headline news level. That's very critical. If you put money into those kind of assets where they all move together in the same direction, you're not going to do. I mean, unless you have high momentum. And hey, I have a high momentum ETF scan as well, so we can see if there's more value or more momentum as well. And that's because there's ETFs that have those available. So I'll show those in another video. Those are another good way to measure the metrics. All right, so wrap it up here. Again, if you want to know more, you got to go over to the email here, opt in at quantlabs.net/books. There you'll get all your available uh, all available videos, books, all free. All right, we'll leave it at that. Thanks for watching. Have a good day.